Hello everyone, and welcome to my April 2024 market update. It's been a long and crazy day, and I'm rushing in here to get you these stats so you can see what's happening in our market. I'm Marty, broker owner here at Pospisil Realty Group, and I'm happy to share this exciting news about our active market. So let's jump right into it. So these are the stats as of the end of last month. We've just tabulated everything into my table here for April 2024. And as you can see, the detached houses sales activity year over year is a little bit down. Now, it's not because people aren't buying, it's just there's not enough to buy. There's not enough inventory. So the actual activity is down. Prices are up year over year for detached in Greater Vancouver by 7.4%. And last month we had a jump of 1.8%. And this is really important because the prices are increasing across the board, as you can see, between 1 and 2% in my summary here. For attached townhomes and half duplexes, the activity is up. We're starting to see some more inventory in that product come online in Greater Vancouver. Prices are up about 5% since last year, and since last month, the prices are up 1.7%. So significant increase in prices monthly, remember. So if we're talking about a 10-month period, we're looking at 18%. So very significant price increases. Attached apartment condos, activity is down about 8% for the reason strictly to do with inventory. Again, there's not enough product. Prices are up 5.7% and a jump of just under 1% last month. So we're seeing between 1 and 2% price appreciation across Greater Vancouver. What's hot and what's not? So the metric I use, as you regular watchers know, is called the sales ratio to determine how hot the market is. If we are over 21% absorption rate, where a certain particular product or price band or area is selling within a given month, we're in a seller's market and there's upward pressure on prices. If we're between 12 and 20% of the product is selling in a given month, we're in a balanced market. It's not favoring the sellers or the buyers. And if the sales rate or the absorption rate is below 11%, we're in a buyer's market and there's downward pressure on prices. So for an active market, we want to break that 21% barrier, and that's what we're seeing happening across the board. So you'll see the detailed stats here. For detached houses, Vancouver West Side, last month, we were at a really good balanced 15%. Now this month, as I mentioned, the activity dropped slightly to 13%. So we're slightly down. Again, not because of lack of interest, but because of inventory. I think I sold most of the houses in the West Side, or at least in kits, maybe I'm wrong, over the last month, but there wasn't a lot on the market. We're starting to see more come on now. So detached houses, balanced market, Vancouver West Side. If we're looking at condos and townhomes on the West Side, last month we were at 24%, very strong on the West Side. This month we are at 26%. So we do have an increase in activity for condos and townhomes on the West Side. That is a strong seller's market because we're above 21% upward pressure on pricing. Let's look at condos, townhomes, downtown. Last month we were at a nice balanced 15%. This month we have jumped up to 18%. So we're seeing more absorption, more units selling on a monthly basis. We're still in a balanced market, but not for very long. Let's jump into the east side. Detached houses, Vancouver East Side. Last month we were at 17% sales ratio. This month we have jumped up to 20%. Just about hitting that ceiling of where a seller's market begins, but still in balanced market territory at the moment. Attached condos and townhomes, Vancouver East Side. Last month we were at a very hot 28%. This month we are at 28%. So same hot market, still a seller's market. Prices appreciating very well for attached product on the east side. So overall, West Side product, we're seeing those sales ratios get to the high end of the balanced band. On the East Side, we're seeing most of the product pass into that seller's market. Overall, in Vancouver, and you can see the various products as we talked about earlier. If we're talking about across BC, this is that balanced market territory. We're pretty well balanced in BC. Vancouver is hotter than the outer lying areas and throughout the rest of the province, but it is on an upward trajectory. So you're going to see that hit a seller's market following Vancouver. What's happening in the burbs? If we look at the month-to-month variances, we can see if we're looking at detached compared to last month in the Lower Mainland, we are predominantly green. So the sales ratios have increased throughout most of the Lower Mainland for houses, except for Mission, Langley, Abbotsford, the west side, of course, you saw that earlier, and West Vancouver. Those are the only areas where the sales ratios have not increased. Again, I think that's just due to lack of inventory. Let's look at attached product month over month. If we look at the Lower Mainland, again, predominantly green. The only areas that have dropped in sales ratios are Port Moody, Burnaby, Ladner, Tawasin, Cloverdale, Abbotsford, and Mission. So we're seeing most of the outlying areas are jumping up in activity, apart from a few select areas. So average MLS price, we can see across BC, is on its way back, still has not hit that peak in 2022 across BC, still making its way towards that peak. And if we look at the Greater Vancouver average house price graph, I always love to look at this one, you can see detached in Greater Vancouver is inching back up towards that peak that we hit back in 2023. We hope to hit that very, very soon. And on attached product, you can see we're there already, and with condos, we're there already. So we're seeing that recovery market. We're going to be hitting some new peak prices very soon, probably within the next few months. I pulled out this graph because I thought it was quite interesting. This is the Housing Price Index. It's an indexed tracker of the price. It shows sort of a good trend analysis for different product across Greater Vancouver over the 5-year trend. You can see that peak we had back in April, March, and May of 2022, and then that drop, and then that recovery over 2023, and now you can see that sharp increase in the HPI as we enter 2024. That's really interesting to see over the 5-year period. Forecasting through 2024, it's what you're all wanting to see. Let's pop into that. Of course, you know my market drivers that are green are market enhancers, red are market deterrents, and orange colors are transitioning drivers. Consumer confidence is back. Buyers are buying. The demand's been held off for too long. They're out there. Okay, so the buyers are certainly buying. Inflation is doing extremely well. We'll show you the numbers shortly, but it's dropped down. The cost of borrowing has not come down yet. That is about to come. And then inventory levels are climbing back. So consumer confidence, as I mentioned, yay, everybody's happy. They're out shopping and buying. The retail sales, a bit of a dip recently, and that's being reflected in the inflation. But in terms of real estate, those sales are the other way. So that's kind of interesting to see. Employment is, of course, increasing again. Housing starts, that's interesting. You always look at the builders to see where the market's going. And in Vancouver particularly, you can see that the housing starts are up from last year. Unemployment rate, nationally, we're at 5.8%, and in BC, 5.2%. Not a lot of change there going on in unemployment, but inflation, that's the big one that my friend Tiff back east is monitoring very closely and making decisions on. We are now down to 2.78%. That's down from 2.86 last month. So inflation is indeed dropping. Investors are hedging that the Bank of Canada rate will begin to lower soon. And any rate cut that's going to happen will be the first in almost 2 years. So it is coming. What day, what month is it going to come? Well, Tiff Macklem says that it's going to come soon. His deputies are careful not to lower the rates too soon, especially with the spring housing market heating up. It's really interesting. Everything else seems to have slowed down, even though people are consuming, and the inflation's coming down, but of course the real estate market's heating up, and of course, they've got a very difficult position, but they want the inflation to continue to drop, but they don't want it to heat up the market further. So you can see he's trying to separate himself, stressing that the monetary policy cannot solve the country's housing affordability issues, and he's certainly right. It's a matter of supply and demand. And the government is pledging to build, I just saw several $1 billion towards rental units. So that's coming. So the government is listening. And 12 months change to the CPI. You can see it was 286 down to 278. Really nice recovery over the past several months from 2023. And we are in sync with our neighbors. We're at 278. And of course, Jerome Powell with the Fed is at 315. Pretty darn close. That's really, really important that we're close and in sync with our friends to the south. But that is a slight increase from last month for them. And you're reading a lot about that with the election coming. It's becoming quite a hot topic. The Bay Street analysts are putting their bets that the central bank will begin lowering the rates in June, and the financial markets put the odds of a June rate cut around 60%. So we're pretty close. We're in April, May, June. Hey, maybe they're going to drop by then. So that's what everybody's hoping. That's why everybody's out there buying. The cost of borrowing. Now, here are the predictions by the 6 big banks. By the middle of this year, 25 to 50 basis points, so up to a 0.5% drop in rates. That would be good. By the end of the year, 1.25% to 1.75% rates, maybe up to 2% drop in our interest rates coming by the end of the year. That's all good news. That's getting people excited. As of April, here is the prediction for the interest rates. Here's where we are now. And if you're looking at the 5-year rate, you can see that's going to gradually start to drop. Very important, the variable rate that I look at, that's going to start dropping very sharply as we hit July, August. So that's really interesting. If this forecast is correct, we're going to start to see some major drops in summer. So let's move on. This also shows, this is a graph I found, on the 5-year fixed mortgage rate compared to the variable rate. You can see how much higher that is and how they are both starting to drop down. I thought that was interesting. But inventory, now that's the other thing we're watching. Now remember I said inventory is not increasing fast enough. Here's West Side houses, cute little house there. You can see we've only gone up by about 30 homes in the entire West Side in the last month. Not enough. We need more inventory to get that demand fed. And if the demand is higher than the supply, that's going to push prices up. Thus the almost 2% increase in prices in a 1-month period. So that's got to increase more. Vancouver West Side attached condos and townhomes. Again, that's only up about 40 homes in the entire West Side for attached product. Not enough. We need a steeper increase in inventory. On the East Side for houses, again, it went from 370 to 390. Only 20 new listings in the entire East Side for houses. Not enough product to meet that demand. And if we go to the East Side condos and townhomes, you can see, again, it's only gone up in the entire East Side by 50 homes. So inventory, yes, is increasing, not fast enough to meet the demand. So that's pushing the prices up. Across BC, if we're looking at inventory, yes, we're seeing that uptick in inventory, but again, not very steep and not enough to meet that demand. And that's the same with all the areas, Kootenays, Lower Mainland, Thompson, Okanagan, and Vancouver Island. We're seeing that inventory increase. What's happening for prices? Okay, the billion-dollar question. Unit sales are, of course, up. Everybody's out there buying their homes. You can see the activity is up. And in conclusion, here's what I'm looking at. We know that the real estate market is directly impacted by mortgage rates, inventory, consumer confidence, and we know that inflation is in the target range. They said we want to be between 2 and 3%. Hey, we're there. The Bank of Canada is preparing for the coming drops. They've announced that. They're just not sure what month it's going to be, but it's coming. Listings are coming on to provide that much needed inventory. but the inventory is not coming in quickly enough, thus the increase in prices monthly. So mortgage rates will begin to drop soon. The rates should decrease by up to 50 basis points by midsummer, as I just said. Could be almost 2% by the end of the year. That's good news. So the buyer demand is at an all-time high, and prices are increasing now between 1 and 2%, depending on the product, depending on the area. And as I predicted, 2024 is turning out to be an extremely active year and will continue to be so, and it will accelerate when our friends back east and all the deputies decide this is the month that we drop the rates. So you will see prices accelerate when those rates cuts are announced. Okay, so real estate talk. I get a lot of people asking me, what's this missing middle that the city's talking about? Well, basically we got a lot of condos and there's houses and there's not enough middle product. So the missing middle initiative is to fit more homes on a single family lot in Vancouver. So what does this mean? Well, they're talking about putting 4 units on a 33-foot lot. What does that look like? 6 units on a 50-foot lot? Well, I found some images to show you what that could look like. Here's a 33-foot lot with the passive family-sized units on it. We've got 1, 2, 3, 4. So it kind of looks like a mini apartment building. I thought that was cool. There's somebody on the roof deck. Here's another one you can see. That's a beautiful one. I've seen something like this, except it's strata down on Cornwall. But your neighbor's home, when it gets redeveloped, could look something like this. We've got 1, 2, 3 levels with units. There's a rooftop deck, and there also could be a coach house in the back. And here's another photo of our image of one. This could be a 6-plex on a 50-foot lot. We've got 1, 2, 3, 4, 5, 6. Again, like mini apartment buildings and parking in the back. And again, you're going to start to see these in the west side. We've got these multi-unit developments alongside these beautiful single-family homes, trying to fit in, not tearing all the homes down, putting up big apartment buildings, but fitting this missing middle in. There's another one. You see 4 doors here. We've got a 4-plex, maybe a coach house in the back. And this one I found in Toronto I thought was super cool. Look at that building. I thought that's great because it kind of maximizes the yard space around it. It's a 4-plex in a typical Toronto lot. It's a 3 to 4 story walk up. There's a garden suite, a ground suite, a center suite, and a sky suite, they call it. Each unit's 1,000 square feet. Each unit has 2 bedrooms and some shared and allocated outdoor space. So I thought that was kind of cool stuff to look at. Be prepared. You're going to start seeing some of these in our neighborhood. So that's my market update for April 2024. I'm Marty Pospisil. I hope you enjoyed it. You can watch these market updates on YouTube, Facebook, and on Instagram. And of course, they're going to be on your podcasts, Apple Podcasts, Spotify, and Google Podcasts. Thank you very much for joining me. Keep those emails coming in. Happy to answer any questions that you have. And enjoy the great spring weather that's coming. The skiing's still good for about another 2 weeks. I hear they're closing Blackcomb on April 14th, if I'm not mistaken. Get up there and enjoy it. I think they're keeping Whistler open a bit longer for us to enjoy. But as you can see, a lot of people are down here buying and not even going up skiing. So there you go. Keeps me busy. Thanks for joining me. Take care.